So I want to welcome everyone to the webinar. You got three great speakers here hosted by Traders Exclusive. Glad to be on right now. Markets have kind of slowed down, so which is good too. At the same time, I'm sure they'll rev up in about an hour or so. Hopefully everyone's heard of Ichimoku. If you haven't, Ichimoku now is rated the 10th most popular indicator by Bloomberg, and it's becoming more and more popular. Pretty much have dedicated about 7 years now towards promoting Ichimoku worldwide and making sure people understand how Ichimoku works. So what I want to do is give you one aspect of Ichimoku today, which is a very, very critical and important aspect of Ichimoku, which basically helps solve a lot of traders' problems. So in today's PowerPoint presentation, my goal is to hurry up and go through, teach you guys how to recognize key institutional support resistance values using the Ichimoku indicator, and then I want to spend majority of my time on live charts. So I want to look at live instruments from any instrument in the world, from China to US to stocks to futures and currencies, okay? Because I think you'll find it more valuable looking at live charts than listening to me going through PowerPoint. So I want to quickly kind of go through everything here. We'll try to answer every question you guys have. If we don't get to it, we'll follow up with a Q&A email to everyone too. And the webinar will be recorded too for everyone, okay? Normal disclaimer, I'm going to quickly go through this. This is to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be distributed without written permission from us. We are broker neutral, so I will be showing you various charting platforms from Thinkorswim to TradeStation to eSignal too. Okay, so let's begin. The biggest thing that I learned in my trading, and if you look at my background, I really didn't start off in the trading industry at all. I was an electrical engineer, worked for Lucent Technologies, and basically retired in 2007 and picked up by an institution to manage currencies, and then eventually became the CTO to do high-frequency machines and behavioral finance machines. The biggest thing I learned in my trading career is money management. As an engineer, I always knew the technical side. In fact, I did analysis paralysis, but what really started getting me consistently profitable was the money management. And until I started looking at money management and making that my foundation, I really didn't start becoming profitable at all. If you look at technical analysis and make that your foundation, you're really going to sit there, go up and down as a retail trader. The only way you're really going to move to the institutional world is you got to sit there and incorporate money management. So what I'm going to do is I'm going to talk about money management and then start moving into technical analysis. So what we're going to do is we're going to take our technical analysis and model it into a money management mode. Okay, and that's what we're going to do. So I'm going to talk about problems and then give you solutions too. So a lot of retail people think about win versus loss. And when they evaluate a trading system or a trading plan, you look at win versus loss. The institutional world really doesn't look at that much. They look at the reward risk. And the reason why is reward risk is really what's going to tell an institution whether you're going to sit there and survive and consistently make money or if you're going to go up and down. And let me give you an example here. Let's assume the markets were trending. Okay, and the markets are trending. Let's say you have a red system here that has a risk of $1 and a profit of 1. So you're going to risk $1 to make $1, so your reward risk is $1, 1 to 1. Let's say over here you have a blue system that's risking $1 to make $3. Okay, in a trending environment, you're going to have a lot more scenarios where you're going to win versus losing. So let's assume that you took 10 trades. Out of the 10 trades, 8 were winners, 2 were losers. If you run the numbers on both sides, what happened is the red system over here is going to be profitable $6 at the end of those trades. The blue system over here is going to be profitable $22. So both systems were positive. The blue system came out ahead, and the reason why is you're risking $1 to make $3. So in a trending environment, both were winners. Okay, a system is not really evaluated during a trending market. The key thing to evaluate a system is when the markets are consolidating. Okay, so let's look at the consolidation market scenario. Let's say a market's consolidating. When the markets are consolidating, we take both systems here, and now what we're going to do is we're going to assume that you're 30% correct and 70% of the time you're wrong. And that's typically the scenario for a consolidation pattern. Okay, so if you run the numbers here, what happens on the red side is that you lose $4. On the blue side, you're a little positive but close to break even here. So you could see here that the blue system wins both in a trending environment and in consolidation environment. And the blue system allows you to basically lose even when you're learning. So in order to be consistently profitable, you have to sit there and try to maintain a 3-to-1 reward risk ratio. If you don't do that, you're going to go up and down, up and down, up and down, and it can run into scenarios where one day of losses or 1 month of losses can wipe out a couple of weeks of losses, a couple of weeks of profits, a couple of years of profits, and stuff like that. Hopefully, the downturn in the last week that we've been experiencing in the market, you have not lost a lot of gains. If you have, then you have an inverted reward risk for your trading system, and that really needs to change. And that was the biggest thing I changed in my trading plan. And once I did that, I started consistently becoming profitable. Okay, so let me move on forward now. And let's take this and now let's kind of reverse engineer everything and say, okay, what controls reward risk? How do I get a 3-to-1 reward risk using technical analysis? Because I'm not a fundamental trader at all. I'm a pure technical trader. Okay, so how do we do it? What controls reward risk? Reward risk is controlled by support resistance. Notice I highlighted here, put it in all caps, major. So the critical support resistances are what really matters. And what really controls reward risk, if you think about it, is that your entry. The closer you have your entry to that key support resistance, the lower the risk you have. The reward is always going to be there, which is the next support resistance. But what really the thing that you can control is your risk. So if you could find the key support resistance values and put your entry right on that and use a small buffer as your risk, then you know that your risk is going to be small. Okay, and at that point you could get a really good reward risk ratio. Okay, so the key to this whole thing here in getting a good reward risk ratio from a technical aspect is that you got to be able to recognize the major support resistance out there on any instrument, okay, and any time frame. And it shouldn't matter if you're a day trader, if you're a scalper, long-term trader, or a swing trader. You still got to be able to find the key support resistance values and then trade from there. The closer your entry is to those key support resistance values, the lower your risk, the higher the reward risk ratio. Okay? So now, how do we find these major support resistances? Everyone takes a lot of technical indicators. They take a lot of courses from moving averages to RSIs to CCI to Fibonacci to Elliott wave. Take all these advanced courses all to find key support resistance values. How do you find them? And that's the journey that we're going to go through and show you how to find key institutional support resistances. Okay? So now, when you're looking, if you think about it, when you're looking for key support resistances, what are the problems you guys face? Okay, and I say you guys, it was me too when I was a retail trader. I went down the same path as you guys did because remember, I was a retail trader before I turned institutional. Let's assume for right now, for example purposes, that you're a 60-minute trader. So you're trading minutes, 60 minutes. Okay, you have a trend that basically was bearish, broke a resistance, started a bullish trend that went all the way up. Then all of a sudden a pullback starts occurring and you're pulling back to this black line here, which is what you recognize to be a major support. Okay, so you recognize this black line here to be a support. So what you're going to do is you're going to buy here, assuming that price is going to bounce off this black line, bounce off there, and come over here, break this pivot, and keep on going. Okay, so you're predicting that at this black line, the price is going to reverse. That's why you're putting a buy entry there. Okay, but sometimes it doesn't hold there. It goes below you, and you get clipped. How many times have you guys gone clipped? Okay, in order to be a trader, you have to be clipped at least once or a couple of times. A lot of times, a lot of people, when they get clipped, you start blaming the broker. You say, well, they saw my stops and this and that and stuff like that. But it's not really the case at all. If you try to sit there and think about why you got clipped, you could actually resolve that issue completely. Okay, and what happens is that price comes down, gets you stopped out, and then takes off to all your different profit levels that you had basically marked up. Okay, why did you get clipped? Here's why. If you looked at the higher time frame, what you would have noticed is that both of them had this nice big trend here going up, but the support for the daily time frame was lower than the 60-minute. So what happened was price action here was pulling back to the daily support here, not the 60-minute. And what happened was is that your stop was above this daily support. That's why you got stopped out, and then this thing took off. So the whole reason why you got clipped was not because the broker saw your stops, was because a different time frame, typically your higher time frame, had a lower support than you did. And what happened was the daily pulled back to its support level, which was different from the 60-minute. Hopefully that makes a lot of sense to you guys. If not, you can look at any trade that you've gotten clipped, and I'm sure if you go to the higher time frame and you look at the support or resistances for a bearish scenario, you'll see that is the case that normally happened to you. Okay? So that's one problem you guys face. The second problem could be where basically you have a trend here, you recognize this to be a support level. Price really doesn't pull back to that level at all, pulls back somewhere in between in this airspace, stops, and then reverses. In this case here, why did it stop there and reverse? If you look to a lower time frame, typically what happens is the lower time frame had a support that was higher than your trading time frame. That's why it stopped there, reversed, and kept on going. So this is a trade you didn't enter or you didn't lose, but it's a trade that basically you missed completely. You're correcting it basically the direction it's going. You're correcting the profit targets and everything, but you just didn't get a chance to enter because it didn't pull back to your level. So these are the two problems that traders typically face when they're doing pullback trading. Okay? Now, the solution is simple. Okay? There's two solutions you could do. One, you could sit there, look at the higher time frame, see where the support is, and put your stop at that point right here. So what happens is your buy entries here, your stop is down here, and you could sit there at least target the pivot high here or even higher. In this scenario here, in this solution, what you're doing is you're adding risk. By adding risk, you're lowering your reward risk ratio, which is not what we want to do at all. Okay, so this solution is something that we really don't like at all, so we're going to sit there and kind of move past this one. The second solution is kind of what we're going to sit there and work on, and in that solution what we're going to do is we're going to look at 3 different time frames. Okay, the day trading, a swing trading, and a long term. And what we're doing here is that we want to make sure in all 3 zones the supports are the same. Okay, so in day trading, when I talk about day trading zone, I'm talking about the 1 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30 minute, 45 minute. Any time frame that you trade in the day trading, it doesn't matter. These you could go over here. You need to make sure it has the same support as either and or 60 minute, 120, 240, and then you also have the daily, weekly, monthly. So your goals is to get the day traders, swing traders, and the long-term traders to have the same support so that when a pullback does occur, you don't get clipped and you know that this support is a major institutional support. Reason why is everyone is thinking that is the major support. Is everyone okay with that? Okay. Now, background. Now I'm just looking at my time. I have a tendency of talking too much, so I want to make sure we have a lot of time to kind of go through a lot of charts. So let's go through and let's figure out how to do this. How do you find the institutional supports that are the same on the day trading, swing trading, and long term? Okay, and that's what we're going to sit there and we're going to show you exactly how to do that now. Okay. Now, before we take that next step, I want to kind of give you some background information. And the reason why is we're going to use a tool, an indicator called Ichimoku. Okay, it's a standard indicator that's available on all charting and brokerage platforms now. So we're going to use that indicator to help us find these key support resistance values across all 3 zones. Okay, so in Ichimoku world, you have 3 types of support resistances. Okay, so if you're looking at this bar, and that's the current bar, that means that's today's price action. It does not matter what time frame you're trading. This is the current bar. When you're looking at the current bar, you're going to have lines above it or below it, which represents support resistance. So when you have lines that are directly below the current bar or above the current bar, that's what we call direct support resistances. They're right at the current bar. Okay? Those are the strongest support resistances because they're influencing the price today. Okay? In Ichimoku world, you also have support resistances that are shown in the future. So it shows you that price will run into these support resistances in the future. Okay? So you'll have all these lines in the future. So whenever you see those lines there, and if you're looking at them, those are future support resistances. Okay? They're the second most important. And then, like everything else, other trading systems, you have lines that represent support resistances that are in the past. That's the third most important. The more current support resistances you have, the stronger it is. The second strongest is the future, and the third is the past. Is everyone okay with that? Okay? Yes? If you haven't seen a chart before, an Ichimoku chart, you may be a little confused. Don't worry, we're about to show you some charts in just a moment. Okay? Next background information I want to give you is the Ichimoku support resistances. Okay, I'm not going to give you a formula. Reason why is we'll provide all the formulas for you at the end of this webinar, so you could sit there and go through them. What I'm going to do is I'm going to color code things. I'm going to show you a red line on my charts that represents support resistance for 9 bars. Then I'm going to show you a green line on the chart that represents support resistance for 26 bars. And then I'm going to show you a yellow line that represents support resistance for 52 bars. Everyone okay with that? Yes? Okay. Now, the key thing here, don't worry about the color codes. You don't need to memorize this at all. Reason why is I'm going to dumb this down even more. We're actually going to go back to kindergarten where all we're going to do is look for lines intersecting lines, and that's it. Because the whole idea of trading is to simplify trading so it could be executed as a normal daily routine without any complications, because all you're doing is trading the probabilities. Okay? So now, what are our goals? Okay, our goal is this. Let's say I'm a 5-minute trader, okay, for this example. Now, I know we have various types of traders on this call, but I have to start somewhere. So I'm going to assume that we're a 5-minute trader. It's a bullish scenario. Price is trended up, and we're pulling back to a support. So I recognize the support on a 5-minute time frame, okay? What my goal now is to make sure that support is an institutional support. I need to make sure that that same support on the 5-minute is also the same support on the 10-minute. It's also the same support on the 15-minute, also the same support on a 30-minute. By having it across all these different time frames, I got all the day traders thinking the same way and thinking that the support is the same thing. Okay? So I've got the day traders thinking the same way. Then I'm going to take it one step further and make sure that this 5-minute support also is the same support on a 60-minute, 120, and so forth, okay? And that basically is making sure I got my swing traders thinking the same way. This is labeled wrong. This should say swing traders right here. So by making sure that this 5-minute support is the same for all these day traders, and now the swing trading time frames, I got 2 zones that are thinking the exact same way. Now I'm going to take it one step extra by making sure that this 5-minute support is also the same support as the daily time frame. By doing that, I now have the day traders, the swing traders, and the long-term traders thinking the exact same way, and that right there is an institutional support. Okay? Everyone okay with that? We're about to take you through an example in just a moment now. Okay? So now, let's take you for example. Does everyone see this example here? Okay? There was a comment, there will be very less entries. Yes, there'll be very less entries, but they got higher probability and they got a good reward risk ratio. Remember, your goal is not to burn commission. Your goal is not to sit there and put a whole bunch of trades on and burn commission. Your goal should be to find the high probability trades, put them on, and be diversified. Okay, in this world where everyone's trading the US stock market, you want to be diversified where you're trading everything. If you think about it, why did the market go down? Due to China. 10 years ago, that wouldn't have happened. Now it does. So what happens is, in order for you to be a successful, consistent trader, you have to be diversified, trading all the different products. Remember, a chart is a chart. Okay. Now, this is a currency here. Don't worry about the instrument or anything else. This is a 5-minute time frame. Would everyone agree that this is a trend here? Okay. Let me pull out my little highlighter here. And this is a basic trend here where we're going up. We recognize we're going up, and what I want to do is I want to enter this trade, so I'm going to look for a pullback. Okay. Now, the pullback I'm looking for in Ichimoku world is this green line. When the green line is flat, which is right here, I'm going to put a buy order right at that green line. Okay. So let me change this back real fast. Right here. So I have a trend. I'm going to put a buy limit order right at this green line here, okay? And then my stop is going to be a small buffer below here. Don't worry, we'll give you that exact definition of what that buffer is. And then what we're going to do is we're going to say our minimum reward is up here. Some people you could choose to get out here as a target. Some people you could take off 50 or 75% of your positions here and let the rest ride. That comes down to money management, okay? And in here, if you look at it, this risk is right here. Your reward is here. So you could see clearly that this gives you a 3-to-1 reward risk ratio and higher. Everyone okay with that? Okay. The only question now we have is that we have this trade set up. We have it planned out. The only question now is that this buy order here that we're buying on this support, is it institutional? Okay. So the only way we're going to do that is we got to do our multiple time frame analysis. Make sure that this green line here, this value here, this support here at this green line is equal to the support on other time frames. So what I've done here is in my charting platform, I took this green line and I drew this blue dashed line here to show you exactly what that value is. Okay, and when I go to the other time frames, this blue dashed line will be shown on those other time frames, and you could see the values there. Okay, so this is a 5-minute time frame. Now I'm going to go to a 15-minute. The 5-minute support is this blue line here, and all I'm doing is I'm seeing if there's any colored line that's intersecting it in the flat part or a peak part. And if you look here, this red line here is right at that value here, and it's right at the current bar too. So we say that the red line support here off a 15-minute is a direct match to the 5-minute support. Everyone see that? All you're doing is making sure that this blue line here intersects the Ichimoku indicator. Okay? So the 15-minute has the same support as a 5-minute, and it's right at this level, which is right at the current bar. Everyone okay with that? Okay? Now, here is a 30-minute. So now in the 30-minute, I'm going to look here, and the green line is off from this blue line. The red line here is off from this blue line at the current bar. So there is no direct match at the current bar. Now I'm going to look forward. And if you look forward, this yellow line here peaked right at this blue line here. So since it peaked right here and formed a little peak, we say there's a future match here, so the 5-minute support matches this yellow line here in the future. Everyone see that? Okay. So all we're looking for are matches here. So the 30-minute was a match here. Okay. On a 60-minute here, there was nothing. The red and the green line here is below the blue one. There's nothing here in the future that matches, but in the past there was a green peak here that matched right there. So this is a past match with a 60-minute green line on a 60-minute. So far we have matches on various different time frames. Okay. Now what we're going to do is we're going to come over here and we're going to look. Well, that's a 60-minute again. Over here on a 120-minute here, and you could see there's not much here. This red line here is very, very close to it, but there's nothing here in the future. There's nothing in the past. Okay. Now this, since we're dealing with currencies, they have a thing called a spread. Okay, and the difference between the blue line and the red line is a spread here, which is very close to being a match. Since this is a spread difference here, we're going to say that red line matches the blue line here because that's just dealing with the spread, which is the commissions in the currency world. Okay? And now on the daily time frame here, you can see that this yellow line here matches the blue line here. Okay? So now, let's sum up everything that we have. Okay? If you sum it up, whoops, this blue line, let me see if I could get rid of that lace. There we go. If you sum it up here, on a 5-minute, we had a green line, okay, which was our support. In the Ichimoku world, the green line represents support for 26 bars. So each bar was 5 minutes. So if you take 5 times 26, which was the green line there, that green line represented a support for 130 minutes. Okay. If you show all the time frame matches here, you could see it matched all the way to the daily time frame with a yellow line. The yellow line represents 52 bars with support. Each bar was a daily time frame, so that says that the support went back for 52 days. Okay? Now, so if you think about it, on a 5-minute time frame, you're looking on a 5-minute, that green line support goes back for 52 days. Something that you cannot see with your natural eye at all. The only way you could see it is by using the Ichimoku indicator and doing multiple time frame analysis. Everyone see that? Okay. These are institutional support resistances. Okay. And one thing step further to increase your probabilities, you always want to make sure that you have a time frame match in each zone. So you want to make sure you have a time frame match in day trading, swing trading, and long term. By doing that, you increase your probability of success. And I've color coded everything here so you could see that we had a match in the day trading zone, we had a match in the swing trading, and then we had a match in the long term. Everyone see that? Okay. Vaughn had a question. What would you say the spread is synonymous to close to close? No, the Vaughn, in the currency world, the spread is just the difference between the bid and ask. They tell you it's no commissions, but that's basically what that is there. Okay. So now, let's go through and start looking at live charts. Okay. So what I want to show you is that we have a scanner that goes through and finds all these multiple time frame analysis. So this morning, and I want to show you some real live trades and stuff like that. So this is the scan that came in this morning, and this scans the entire globe. And what it looks for is a 240-minute strategy with multiple time frame support resistances. Okay, and what I'm going to do is I'm going to scroll down here, and you guys can see it. It pretty much covers the globe. But what we're going to do is we're going to concentrate on some U.S. stocks in here, and what we'll do is we'll concentrate maybe on some popular ones here. I think everyone's seen Goodyear, Hershey's chocolate, and stuff like that. So let's go look at some of these, and we'll go from there. Okay? So let me pull up a chart real fast, and let's start looking at this. And what we'll do is we'll also analyze the markets too in just a moment. Give me one sec. Okay, so I'm going to use Thinkorswim here. Give me one second. I'm just pulling it up. Seems like I'm getting technical difficulties now. Ah, here we go. Okay. So let's look at this list here. And I think one of them was Hershey's. So let's look at Hershey's. So HSY. And I'm going to go to the 240-minute time frame since that was my first time frame here. Since this scan was looking for 4-hour trade setups there. Okay. Now, what I'm looking for here is, and this is a scan that's been coming up for a couple of days. So let me zoom in here, and I'll show you exactly how to do it. So what I do is I pick a trading time frame. Pick your trading time frame, whatever trading time frame you are, whether it be 10-minute, 30-minute, or whatever it be the case. When you do that, at the current bar, draw a line at the green line, draw a line at the red, and draw a line at the yellow line, which is at your current bar. Okay, let me get rid of this guy right there, and let me get rid of all these alerts too, to kind of simplify things. So I got 3 lines, which are pretty much the Ichimoku lines right at the current bar. Now this is a 4-hour time frame, so what I'm going to do is I'm going to go to the daily time frame, which is the higher time frame. And what I'm going to do is which one of those dashed lines intersects the Ichimoku lines in here. This dashed line does not intersect anything at the current bar, so I'm going to delete this guy. Okay? And I drew him too, so I'm going to delete him. This guy intersects the red line here, so that's a time frame match there. So I'm going to delete the bottom one, which does not match at all. Whoops, that did not help by duplicating it. Okay? Now, I have a direct match wherever the daily, and if you look at it, it matches the resistance here on the 4-hour. And if you come here on the 2-hour, it matches the green line on the 2-hour. And if you come down to a 1-hour, back here in the past it matched it here, and now what happens is today it matches it in the future. Everyone see that? So there was, if I took this trade here, when it came here, it was a direct match there. Now it's a future match here. So that's the 1-hour. And in the 30-minute here, you could see this is a future match here with a yellow line there. So that's a multiple time frame resistance right there. And this is controlling this instrument on it being bullish and bearish. Okay. Now, great thing is that when the markets tanked, like here, you saw all these instruments tank on that day. Very first thing we did was we looked at our scanner and we ran the multiple time frame analysis, and look what happened. We got these things here. So if you sat there and recognized these MTFs, all you have to do was sit there, short it here with a very tight stop, whatever the buffer is, okay? And at that point, you could sit there and try to target this guy, or you could get to different target levels here. But you could see that easily on this one here, if you look at the lowest point here, you got to 3 to 1. And you could see how this level here is being maintained and basically being bearish. As long as this instrument is below this resistance here, it will be bearish. If you get above that resistance, it's now a support, and at that point, we will be bullish. So what you could do is you could find these MTFs, and at that point, you could sit there and go to whatever time frame you are and say, okay, if I'm above that MTF value, I'm going to start looking for bullish trades. If I'm below the MTF value, I'm looking for bearish trades. Everyone see that? Yes? So that's that one. Here's a trade that I took here, FFIV, and you guys could see these on Twitter too. Okay, so look over here. You could see here what happened here. There's the green line here on a 1-hour here, and if you look at it, it matched the green line on a 2-hour. It matched the green line here on a 4-hour. It matched the red line on a daily. It matched the green line on the weekly, and matched the red line here on the monthly. So this was a resistance on the monthly, weekly, daily, 4-hour, 2-hour, 1-hour, and 30 minutes. This right here is controlling whether this is bullish or bearish. So if I'm above this line, it now becomes an MTF support. If I'm below this line, it's an MTF resistance. If I want the lowest risk trade, I'm going to put an order right at that support resistance, which is the MTF. Everyone see that? Okay. Everyone good? Now you could use this way of finding these MTFs for your existing system, or you could even use it for Ichimoku in looking at the cloud strategies and stuff like that. I'm not going through the very details of the cloud strategies. There's strategies in here, but what we could do is we'll show you in a minute how you could sit there and learn all that information with all the different strategies and stuff like that. Okay. Brian asked, what time frames would you use for swing trading? Well, the question comes down to is what swing trading in your mind. Typically, swing trading is where you're going to carry positions overnight, and if you're doing that, you're typically trading off 60 minutes, 2 hours, 4 hours, or something like that. If you're day trading, their typical time frames are 5 minutes, 3 minutes, 10 minutes, 15, 30, and stuff like that, where you're typically closing out those positions within that day. There were some questions, does this work in Forex? Yes. As a trader, you don't want any limitations at all. So we do anything we talk about, we always talk about it in terms of it could work for any instrument, any time frame, and stuff like that. Okay. So now let's quickly go through and start looking at some other things. Okay. So what I want to do, let me show you this real fast here. And this is the volatility index. Everyone see this? This is a VIX. This is an inverse relationship with the stock market, okay? And what you could see here, you see this yellow line here, right there? When we broke that resistance, look what happened with volatility. We went up. This was an early indication from us, and we blogged this on our Twitter too, that the stock markets were going to go down, because when the VIX goes up, the stock market goes down. This was the MTF resistance here that we broke. This is a 4-hour chart here, and if you come over to here, it matched the daily here, and also if you come over here, at this point right here, it matched the red line here too. So this is a multiple time frame resistance. So when we broke it, that told us that basically the VIX was going to go up, that the stock market was going to go down. And you had a heads up earlier if you went down to this time frame here, right here on this day right here, which was August 20th at 9:30, is when the VIX closed above that MTF resistance, which now became an MTF support. Okay. Also for the U.S. stock market, I want to show you how critical these Ichimoku support resistance levels are. This is the E-mini S&P 500 futures, and if you look at it, we went down, right? The futures went down, 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 down. Where would it support? If you look here, there's a green line here which represents support for 26 bars. In this case, it's 26 months. Look at the flat part of this green line here. That's exactly where it bounced off and went up. Notice back here in the monthly time frame here, back in 2011, right here, before the markets took off, basically the charts respected this monthly yellow line. So you could see that these Ichimoku lines here, price really respects them a lot, with no matter what instrument you're trading and so forth, and they're very helpful in predicting which way things go. Okay. The other thing I want to show you quickly here, because we're going to be running out of time here, this is a weekly chart for the E-mini S&P 500 futures here. Okay. And if you scroll back here, whoops, I need more data. And I will show you guys crude oil too. I know that's a question, and also China market. I'll show you that too. So just bear with me a sec. So the cloud, you see these clouds. The sentiment, the way the sentiment works is if price is in the cloud, the sentiment for that time frame is basically neutral. If price is above the cloud, the sentiment's bullish. If price is below the cloud, the sentiment's bearish. Okay. Notice here, right here, we closed above the cloud after a long time. So January 16, 2012, we closed above the cloud. We stayed bullish on the weekly time frame here. For the S&P mini futures, we stayed bullish, 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 bullish all the way through, and last week was the first week that we closed within the cloud. Okay, that's since 2012. So our sentiment for a long-term basis for the mini S&P 500 futures changed to be neutral, and this week here it broke the support, this yellow line here, and went below it here. You guys see that? So the sentiment now is bearish as far as the E-mini S&P 500 futures. This is how we use here to judge for long-term positions, more towards retirement accounts, 401k and stuff like that, for position holding for portfolio management. Okay? And you could use this, you could do multiple time frame analysis for forecasting ahead of time. Okay? There was a question in here, can you give us a heads up in advance of the decline? I showed you, Dean, on the VIX how basically broke out of the cloud. That gave you early indications of it going the market, the VIX going up, with the VIX going down. Also, if you looked in our blog, we do these morning meetings now, and we talked about this on a 4-hour time frame here. When we broke this support here, this is the MTF. On August 20th, we were talking about the markets going down, and we were telling people in our morning briefing meeting to be very, very cautious and stuff like that. And we talked about this going down, and that's exactly what happened here. Okay, let's now cover quickly crude oil and then go to China real fast too, because we're running out of time. So what I want to quickly do is cover crude oil here, and then we'll cover China too, because that seems to be the topic of discussion for everyone. So the levels here I'm about to show you for crude oil are levels we've been posting for the last couple of weeks for crude oil. So let me pull this up. So here's crude oil here, and you could see here there was a multiple time frame support here at 52.41 right here, which is the green line here. When we broke below that here in July 13th, 2013, we sat there and started blogging on Twitter and Facebook, everything, these support levels here. And you could see that we got to our first support level, and now the next support level we have is 36.87. And where are we getting them from is back all the way back here, because there's no other price history here except all the way back here, which is basically dating back from 2008, 2009 level there. Those are levels that we're now starting to experience support levels too, and you could see them based in Ichimoku. But this is the levels we're being short here since 52.91. Our first goal was to get to 42.30, and our second now is 36.87. But what we're doing is we're looking at the lower time frames, keeping our stops very tight. Okay. There's that one. Let's go over to China and let's discuss the Chinese market. That's, where is the Chinese market? Wes, can you pull up the Chinese symbol for me?
Probably the ETF.
No, it's 000. I think it's, well, how many zeros in the 2? Give me a sec. We'll look at the Chinese market in a minute. Let's see. Oh, let's cover Greece while we find it in a minute. So here's Greece, topic of discussion here. Greece closed their markets here, but you could see the supports we outlined. There's a first support here, and if you look back, where did I get that support from? Right here, this yellow line there, okay? And then the next one is right there. Okay, so let me do the Chinese market real fast. 1, 2, 3, 4, 5, SHG. Here we go. So here's the Chinese market here. And you could see here, on this here, you had a flat green line here, right? Like here. When we broke that support right here, that basically told us the Chinese market was going down. The short-term support was up here. So believe it or not, when we broke here, there was an MTF level in the lower time frames at this point right here at 48.48, which was indicating that the markets were going to go down. We didn't know how far it was going to go down. We thought it was going to get to the green line and hold, but it didn't hold there. This now became a resistance here, and you could see it held a resistance there, and now you could see that the Chinese market is heading down to this flat yellow line right there, which is this next support level right there. So on a weekly basis, that's basically where the Chinese market's starting to go down, and you could see that there very clearly. If you want to sit there and look at a daily time frame here, you could see the daily time frame level is right here too, and you could see these levels breaking down. One other market we discussed this week here, and I got to wrap up now. Here is the Japan market. If you look at here in the Japan market on a weekly basis, a lot of the global stock markets were going down, but the Japan market was holding this level here at 20,058. Finally, last week it started going below it, and at that point our sentiment changed from a consolidation view to being bearish. And you could see it's coming down. It came down to the support, which is that future yellow line right there. Okay, so hopefully you guys found that very valuable. I've given you guys a taste of what some of the power of Ichimoku can give you. It gives you the ability to find the key support resistance values with the different color support resistances it offers. It also gives you the ability to do multiple time frame support, and the reason why is the indicators are not lagging. It's not based on closing price at all, and that gives you the ability to do multiple time frame analysis. Okay, now if you're interested, I'll give you a 5-minute, we got a little promotion going on. I'll just quickly talk about this here. If you're interested and you want to learn more about Ichimoku, its strategies and everything, we have a Ichimoku 101 DVD. This DVD is going to go for everything about Ichimoku you need to know, from strategies to indicators to formulas and stuff like that. One of the things we also talk about is the Ichimoku Cloud Internet myths. There's a lot of people talking about how they translated the Japanese books and they got hidden secrets and stuff like that. I'm going to go through and actually talk about what's in the original books that Goshi Asada did. And I'm going to go through what's there, the timing elements, the price elements, stuff like that. Then we'll also go through the Ichimoku Cloud strategies and all that there. There is a free ebook that goes with this 101 DVD download too. And what we're going to do is we'll give you a promotion now today. It's called Everything About Ichimoku. The normal price for the DVD download is $299.99. For today, I'm going to give you two different promotions, and the reason why is I really promote a lot of people being leaders, making instant decisions. So here is the link here to sign up for the promotion here, which is ichimokutrade.com/leader. If you go there, it'll take you to a screen where you could purchase this. But this offer here is only going to be available for midnight today, $149.99. This is Eastern Standard Time for $149.99, so if you make an instant decision. After midnight today, the promotion price will still give you a discount, but it'll go down to $199.99. Okay, so there's the promotions here. You could go to ichimokutrade.com/ichi for the normal promotion here. If you want the promotion before midnight Eastern Standard Time, it's /leader here. Okay, and that's for 3 days only too. Sorry, forgot about that. This will be valid for 3 days only right there. Okay, and we will put that in the go-to meeting in a minute, so you guys can have that too. But if you guys have any questions or anything, you could email us here at info@eiicapital.com, and you could also, our phone numbers are at the beginning of the slide, which we just showed a couple of at the very beginning. Okay. Hopefully you guys found it useful. I know I had to rush through things, but I wanted to make sure I got through everything and got to a lot of live charts, because that's kind of where things are very critical. Okay.
All right. Thank you so much, Minash. That was very